Good day, students. You're welcome to this class. This is the continuation of the topic issues of shares. Now, if you notice in our previous class, we discussed about the introduction to issues of shares, and we're able to discuss about shares that are being issued when full payment is made. So in this class for today, we'll be discussing about issues of shares by installments, by instrumental payment. Now, when we talk about issuing by instrumental payment, or when we talk about instrumental payment majorly, we're talking about a situation whereby you're making a sales and then the full payment of that particular goods is not paid outrightly. That is, the payment is split and they are paid in bits. Take for instance, I'm buying a phone of 50,000 naira, and I'm buying it through instrumental payment. So in that case, what instrumental payment means is that I would not be paying the whole 50,000 naira at a go. That is, I'll be splitting them. Take for instance, I can pay 20,000 naira at first, then the second month I can pay 30,000, or I can pay 20, 10, 20, or 10, 20, 10, 10, 10, 10 till I exhaust the amount of money I'm expected to pay. So in this class, we'll be discussing about the issue of shares by instrumental payment. Now, when we talk about shares issued, payable by installments, there are some steps that you have to take note. There are some steps that you have to, consider, and the steps are, number one, that is, don't forget, when we talk about steps, while we were discussing the shared issued payable in full, that is, we said that there are some steps that you will follow. We emphasize on 3 major steps. That is, the first one is they would the company that is selling the shares would advertise to the public that, or would call member of the public to come and subscribe to their shares, and that at that point we said they are sending prospectus, because prospectus is a document that the company selling shares we used to advertise. We used to call the members of the public to come and purchase their shares. And also we talked about application. Now the second step is the application, that is, the applicant to come and pay money to request for that share, and the third part, which is allotment. So we have to emphasize on those 2 parts in this class for today. Now we are picking, and don't forget that when we talk about prospectus doesn't require any financial commitment. That is, no one is paying. So in that case, we might not be having any financial commitment, so to say. But in this class, we'll be focusing, or would concentrate our on the second 2 parts, which is the application and the allotment part. Now, when application money are received, the first stage, or when let's come back to what we are discussing now, which are the steps on when shares are issued payable by installment. The first thing is application will be received with applications of the shares would be received. That is, those that are applying for the shares, that is the applicant, they will come to pay money. So then normally there's an accounting treatment, there's an accounting entry that you are supposed to pass. But first of all, just know that applications are received with the money, and the second is they are treated and shares are allotted to them. That is, now when we're talking about treatment to the application money, there are instances whereby we could have excess application, that is oversubscription. When we are discussing about oversubscription and undersubscription, we talked about that in our last class, and then I want us to check those videos. That's the issues of shares part B. Check those videos so that you'll be able to acquaint yourself with the necessary knowledge part time. So we discussed about the oversubscriptions. Now, when we will have at times when we have oversubscriptions, how do we treat them? Definitely we have excess applications. That is, in that case, how do we treat them? We'll be treating them in this class majorly. So the next thing is, after we have treated them, we've treated all of them, shares will be allotted to them. Now the next thing now will be, for those excess applications, are we refunding money to them? If, of course, definitely in an ideal system, people that are okay, take for instance, I want to sell five shares, and according to the rules of the company, I have on my memorandum of association that I could sell maybe I could sell 5, and I want to sell 5. And when I go to the market when I issued my prospectus, like probably 7 people applied. Now when 7 people applied, in that kind of case, definitely I have to refund the 2, or look for a way to see how I can compensate all of them. So if in the case where I'm refunding, the excess money needs to be refunded to unsuccessful applicant. So in that case, there is an accounting entry that you are expected to pass for such scenario. So we'll discuss that in this class. And the next thing is, the company often holds the excess application money of those who are partly successful and to whom allotment have been made on pro rata basis against the money payable and allotment. Now when we talk about holding excess money, there could be instances whereby companies would say, okay, for those people that have applied in excess, now we are not refunding money to them. Instead of refunding money to them, we would rather, you know, share or give them the shares on pro rata basis. When I talk about pro rata basis, we are talking about situation whereby, take for instance, you know, when I talk about pro rata basis, I'm trying to, you know, apportion them based on a particular rate. Take for instance, I can tell them, or I can say, for every 3 people that, you know, requested for share or that subscribe, I'm going to be giving them 2 shares. Do you understand? So it's going to be 2/3 times the amount of shares I'm sharing. Take for instance, but okay, let's by the time we, you know, I think there's a particular example that will be considering that pro rata basis. Basically, I guess the second example. So by the time we, you know, check that, we'll be able to understand or get a clear picture about the pro rata basis. Okay, so the next step is we will be allotting money. Allotment money are received or balanced. So in that case, now this part, I want you to please take note of the fact that whenever shares are issued and they are payable by installments, now the whole money is not paid at a go. You know, unlike the previous video that I did, that okay, I was talking about payable shares issued when and payment is made in full, the whole payments will be made at a go. But in this case, now we are not paying. We are not paying at a go. We are paying in bits. So in that case, what it implies is that, you know, take for instance, I want to sell shares of what's 1 naira. So what I've done is, or what I could do is, okay, I could split the payment. So even though I'm at the value of the share is 1 naira, I could split them to say the first payment would be maybe 50 kobo, then the second payment could be, you know, 20 kobo. So in that case, that is 70 kobo. So I have 30 kobo next. Now the next payment could now be, you know, 30 kobo. Do you understand? So it has been split into 3 places. So the first payment usually will be the applications, because that's the first set of money I will be receiving. Now the second set of money I will be receiving now will now be allotments. Am I making sense? So what I'm saying in essence is, when we deal about shares payable by installment, the payment, the first payment ideally is application money. Now the second will be allotment. Now the third will now be calls. It could be first call, second call. I mean, ideally it's going to be calls anyway. So it depends on the number of calls, the number of times you want to split that you want to split the money. You understand? So A to, now when we talk about A to D, it talks about application. Now E now is talking about allotment. So in that case, allotment money will be received. Now we are done with application. Take for instance, I want to sell share worth, you know, 1 naira, and for the application, I have said that for application I have to get 50 kobo. You understand? So now for allotment, I can fix a particular amount there. Take for instance, I'm fixing like 30 kobo. Don't forget, I'm going to 1 naira, and for application I've received 50 kobo. For allotment I've received 30 kobo. So after I receive money for allotment, what would I do? The next thing is going to be, now I will allot shares to the people, set of people that come during the allotment period. Now for the next step is going to be, the first call will be requested and the money will be received. So in that case, take for instance, don't forget, I have done my application, which is 50 kobo. I've done my allotment, which is 30 kobo. Now for this time around, I'm making my first call. So I've requested for the money and the money has been received. So in that case, take for instance, the amount for the first call is 20 kobo. So application is 50 kobo, allotment is 30 kobo, the first call is 20 kobo. So what I'm saying is, okay, good, if you add up 50 plus 30 plus 20, in that case, that means I have received all the value, like all the money I'm expecting for my shares. Do you understand? But there could be instances whereby, you know, I could split them. Okay, instead of making the first call 20 kobo, I could make the first call 10 kobo. So in that case, I have 10 kobo to go. Do you understand? So in that case, I could you know, go ahead to make the second call. So if probably I have a second call, if I'm giving my, you know, subscribers the opportunity to purchase, you know, more, I mean, to have more time to purchase whatever they want to purchase, I could give them second call. And after second call, you know, there could be instances whereby you could even have final call after the second call, and there could be instances whereby you could have, you know, first call, and first call would be the only time or the only privilege that you would have. It could be first call and final call. It depends on the kind of organization's part time. You understand? So basically, what I just want you to know is that whenever we are talking about shares issued payable by installment, majorly it's a situation whereby they are not paying the whole amount at once. That is, they are splitting the money and they are paying in bits. So basically, that is what shares issued payable by installment, you know, deals or is talking about. And you have to take note that the accounts will now be splitted into application account, first call account, it could be application account, then allotment account, then first call, second call, and until they are exhausted. You understand? And these will be considered under the terms mentioned in my previous class, which is at par, at premium, and at a discount. So you have to take note of that. And please, at this juncture, you have to take note of, when we talk about application and allotment, application and allotment are usually joined together in one account. You have to take note of that, please. And when this is so, the excess application money are held over and set off against allotment money in the application and allotment account. So don't forget, when we talked about oversubscription, that is people, when we have excess applications in our account. So in such scenario, how do you resolve the issue of excess application? So the excess application money are usually held over and set up against allotment money in the application and allotment account. So you might not need to commit yourself too much on this. I think I have an example that talks about this. I think that should be example 2. So just follow me till I get to the example, so that we'll be able to understand what all of this is saying properly. Now, both separate accounts can be opened for allotment and application account in order to show the exact effect of setting off excess application money against the amount due on allotment. So you can open separate accounts also, and you have to take note of this, that usually in answering examination questions, the use of combined application and allotment accounts is recommended anyway. So because there's no need for you to open one application and then open allotment. However, over time, experience has shown that students find it difficult to really comprehend the logic behind the set of when a joint application and allotment account is used. So hence, there is need to separate the account for a thorough analysis. Do you understand? So because there could be instances whereby at the point of setting off those excess applications and the likes like that, they could be mixed up. Do you understand? So in that case, I will advise that you should open separate account for application and allotment. So now let's move to questions. Let's move to the next slide. Okay, before we check the illustration, let's talk about the accounting entries. The accounting entries that you are expected to pass for each of those transactions, those steps that I just mentioned in my previous slides. Those steps, when we talk about application, when you receive money, what do you do? What are the accounting entries you pass? And don't forget, at the beginning of this topic, I told you that you would need a proper knowledge of your double entry system. If you do not understand that topic, please, I will advise that you should check our videos on double entry principles, so that you'll be able to understand how to pass your entries correctly. Because if you are really struggling with that, trust me, you might not find it funny with this topic. So now the first thing is, don't forget, when we talk about issuing shares, the first thing that would happen is applicants will definitely come to pay. So in that case, when applicants they are coming to pay, definitely the bank account of the company would be receiving money. So in that case, definitely at first on receipt of application money, the first thing you do is you debit your bank account. So you debit bank account. Now, who are we crediting? Don't forget the rule of double entry that you tells us that you debit the receiver and you credit the giver. So in that case, who is giving? The applicant. So you credit your application account. So you can see the reason why we need to refresh our memory on the double entry principle now. So the next thing, after you have received money on application, the next thing now is you allot shares to them. So at the point of allotting shares to them, what do? You are allotting shares to the applicants, those that have paid. So in that case, what you are doing is you go to application account, you debit them because you'll be giving them shares. So you debit, they will be receiving shares. So you debit applicants, that is debit application account, and you credit what? You credit your ordinary share capital account, because what you are sharing for them is shares. What they have paid for is shares. Do you understand? So you credit share capital account with the application money. Please take notes. You credit share capital account with the application money this time around, because you have received, then you are giving. Do you understand? Okay, so we move to the next thing. Now the next thing now is when we have if you have instances whereby you have allotments and application matched together. So when you are allotting at the point of allotting shares, what you should do is you should debit allotment account, then you credit share capital account with the amount on allotment. Don't forget that in this case, you could be having don't forget that in this case we have first of all we are discussing about shares issued payable by installment. That is, you are not paying all the shares once. So on application they will pay money, also on allotment too they will pay money. So at the point when they are paying money for the allotment, you are still passing this first entry, which is debit bank account then credit application account. Now when you are allotting shares to them too, you will debit allotment account then credit share capital account, because what you are sharing is still share capital. But this time around you will be crediting them with the amount due on allotment, because this is allotment. Please, you have to take note of that. Then the next thing now is when you have instances where we have sums, like when you have money refunded to unsuccessful applicants. That is, I talked about excess application the other time, and of course situation whereby you have excess application, of course there could be instances whereby you have unsuccessful applicants. That is, those that have applied but they will not be able to get the shares. They will not be able to get shares in the company. So in that case, we call those set of applicants unsuccessful applicants. Now when you are refunding money to them, you are giving them their money back. Okay, you people should take go, we can't give you shares again. So what entries do you pass? The entries you pass is, because you are giving the applicant, the unsuccessful applicant are the one receiving, so you debit applicant or application's account and you credit what? Can you guess? Okay, so you credit bank, because it is money you are giving them and the money will be moving out from your bank. So you debit application account, then you credit your bank account. Okay, so if you're together, we can move. Please, you might need to pause this video, listen over and over again, because the truth is, if you don't really understand all of these concepts, you might find it difficult to be able to comprehend the examples by the time we get there. So the next thing is, now when we have excess application money retained on account of allotment. Now when we have excess application money retained on account of allotment, there could be instances whereby, okay, this time around the excess applicant, I'm not returning money back to them. Instead of returning money back to them, I'm retaining the money on account of allotment. That is, okay, I'm saying instead of, don't forget that, okay, I'm assuming that, okay, this set of people they are the set of people that are paying on application, and they're the same set of people that are paying on allotment. So instead of, although I have gotten excess application, that is, I've gotten beyond the amount of shares I could offer. However, and don't forget that the rule of the game this time around is they are not paying in full, they are paying in bits. So I can still assume that instead of paying, take for instance, they're expected to pay like twice or three times, and they've made the first payment. I can tell them that instead of receiving the second payment, please, instead of paying the second payment, the excess I've received now should work for me for the second payment. So usually for the excess application money retained on account of allotment, what you will be expected to do is you debit your application account, then you credit allotment account. So that is the way it works. So those are the accounting entries you pass. And so we move to the next entry. Now the next entry is on receipt of the amount due to allotment. Now when you receive money in the bank account, like definitely when you receive money will go to the bank, and the rule of double entry says you debit the receiver. So you debit your bank account, then you credit allotment, because where are you receiving, or what are you receiving money for? What you're receiving money for is on allotment, so then you credit allotment account. So the next is I'm making a call. So when you're making a call, usually when you're making a call, what are you supposed to do? You debit the call account, then you credit ordinary share capital or allotment account, because what you'll be doing is you'll be allotting shares. So you credit allotment account. Then now on those calls, whenever money is received, you debit bank, then you credit calls account. Alright, so let's take an example together. On 1st of January 1990, Kalakuta Limited makes an issue of 13,000 ordinary shares of 2 naira each at par, and these are the ways you ask them to pay. Don't forget it's by installment. You ask them to pay 1 naira on application, 60 kobo on allotment, then 40 kobo on first call. Then you ask to show the general entries and ledger. So to start with, let's open our journal entry and our ledger. So for this case, we've been asked to show the journal entries and the ledger. Alright, so let's do this. We need to be fast about this. Okay, so for the journal entries, you draw your formats, you draw your journals. This is journals, debit and credit. So you have your details, debit and credit. Then now for your journal entries, at this juncture, I would need to navigate through my screen so that I'll be able to see what we are dealing with. Alright, so the first instance here is you have your for the application, they are paying 1 naira. So 1 naira by the number of shares, which is 13,000, it will be 13,000 naira. So 1 naira times 13,000 shares is going to be 13,000 naira. Now for this application, the process, don't forget, is first of all the money will be paid into the bank, and when money is being paid into the bank, you debit bank, you open your bank account, you debit bank, then you credit applicant, then application or allotment account. That's 13,000 naira. Why is this so? Don't forget, in double entry we are saying that you debit your receiver and you credit your giver. Okay, so and the receiver, what you're receiving is you are receiving the money into your bank account, so you debit your bank, right? And who are you receiving the money from? You're receiving money from the applicant, so you credit application and allotment account. So that is the more reason why at the beginning of this topic it was said that you need to confirm and to be able to remember what you've been taught on the topic, principles and practice of double entry. So if you are finding it difficult understanding that topic, I might need to suggest that you should go back and understand that topic so well to be able to grasp the full knowledge of this topic per time. Alright, so now what you've done here is you have received money on our application, so you have to give the description here. So you have to give the being money collected on application. So after you have received money, the next thing is you have to allot shares to them. When you're allotting shares, you debit applicants because you give them shares, so they will be receiving shares, so you debit the receiver. So debit application and allotment account, that's for the shares, and then you credit ordinary share because what you are giving them is ordinary share capital, so you credit ordinary share capital. So debit application and allotment account, then credit ordinary share capital account. That will be being allotment of shares. So this is 13,000 shares. Please have to take note of that. This is 13,000, not 12,000, being allotment of 13,000 shares. So the next is now 13,000. Let me correct this. 13,000, not 12,000. Please, you have to take note of that. All right. So let me check. We are done with application. The next is allotment. Now on allotment is 60 kobo. This is 60 kobo. This is 0.60. It's going to be 60 kobo times 13,000. That should give you 7,800, I guess. For allotment, so you are still using the same process. First of all, money will be paid into the bank, and the second is they will be allotted. So during allotment period, money will be paid. Bank, you debit your bank account, then you credit your application allotment account. Because don't forget, in this case, what we are doing is we are using combined application and allotment account. We are using combined, that is joint application allotment account. So you debit bank, then you credit application. So this is being money received on allotment of money. Okay, so the next is you debit application allotment account with 78, and you credit ordinary share capital with 78. So being amount payable on allotment. So that is the way things work. So as soon as you're done with allotment, then you go to first call. So we're done with allotment, then we go to first call. So before we go to first call, I want to quickly tell my student, because from the last videos we got some comments. I got some personal comments with students trying to express themselves that most of their teachers or their lecturers teach them with ledgers. So, and my point is, regardless of whatever your lecturer is using to teach you, be it journals, be it ledgers, what you need to do is just see, if you understand any one, be it ledger or journal, trust me, you should not find it difficult to prepare the second. You understand? So now in this case, take for instance, let's assume this is of course this is a journal. Let's assume you want to use this to prepare the ledger. It is this exact thing that you're preparing or you are posting on your ledgers. What you just need to do is, for this first transaction, let me take some steps back. For this first transaction, you said you have bank accounts debited, then application allotment account credited. So let's assume you want to present this on your ledger. What you need to do is just open T formats on your T table, two different T tables. Now one for bank account, then the second for application account. Now on this bank account, what you just need to do is, of course, you know the left is your debit and the right is your credit. So the left is your debit, while the right is your credit. So for the bank account, you have to post it to the left, which is debit, and for the second, which is application allotment, you post it to the right for your credit. So that is the basic thing. That is what you're expected to do. That's what you're supposed to do. Alright, so for first call this time around, what you need to do is, don't forget our usual process is when you receive money for the first call, you debit your bank account, right? Then you credit the call. Now for first call, what you would do is debit bank account, and don't forget that for first call, as our usual practice is, for first call the amount is 0.4 kobo. That's 0.4 naira, sorry, that's 40 kobo. So 40 kobo times 13,000 will give you 5,200. So you debit bank account, that's 0.4 times 13,000, 52. Debit bank account, then credit first call account. Now this is going to be bin money received for on first call. Do you understand? All right, so the next is, after you've received money, the next thing you have to do is you have to give them shares. Now the point of giving them shares, what you do is you debit first call account, right? You debit first call account, then you credit ordinary share capital account, because it is the first call that it is during the first call that you are giving out shares. So you debit first call, then you credit shares because you are giving out shares. Don't forget the rule of double entry. Okay, so being shares allotted on first call. Then as soon as you understand this so well, we can thereafter go to our ledgers, like go ahead to post our ledger. So I'm posting our ledgers. Okay, the kind of ledger I want to produce is general ledgers when joint application and allotment account is used. Now in this time around, if you look at this journal entries, I can easily count the number of ledger that I'll be posting, and the number of ledgers that I'll be posting are, okay, let me count. I have bank account, that's number 1. I have application and allotment account, that's number 2. That's the number 2 ledger. For number 3 is okay, I have ordinary share capital account, bank account, application and allotment account, ordinary share capital account number 3, and the first call account, that's number 4. So I have to open 4 different ledgers. So now opening the ledgers, and let me just draw my T format. So this is bank account, so I have to open the next, which is application and allotment account. I have to open the next, first call, ordinary share capital account. So those are the 4 ledgers. Now to start with, don't forget, first of all, we started with application. And on application it was 1 naira, right? On application it was 1 naira. So 1 naira, and the rule is you receive money first, then you give out your shares. You receive money first, then give out your shares. So at the receipt of money, when you receive money, you debit bank, right? You create applicant, then debit bank of 13,000 naira. That's 13,000 times 1 naira, 13,000 naira. Then credit application and allotment account, and that's it. So the second is give out shares to these guys, applicants. Now when you're giving out shares to the applicants, what you do is you debit applicants, that's application and allotment account, then you credit ordinary share capital account. Is that fine? So you debit application and allotment account, then you credit ordinary share capital account, 13,000 naira. Then if as soon as you understand that, we can move. So we are done with application, then we move to allotment. And allotment is 0.60, that's 60 kobo. That's 60 kobo times 13,000, which will give you some 7,800. Now the first is you receive money, come to the bank, receive money, then your corresponding credit entry will come to this account, which is application and allotment account. The credit entry is 780 here. Do you understand? So if you understand this, please let's move to the next. Then as soon as they receive money, you give them cash. You give them capital. So giving them capital, you come to debit it here, 78, then you credit the ordinary share capital account. You can see, so for each transaction, for each entry, we are recognizing the double entries. So that's the more reason why I'm always emphasizing on the fact that you have to understand the rule and practice of double entry very well. So by the time we sum up this, okay, so the next is we are done with allotment. Then let's move to first call. Now for first call, you receive money, debit bank 52, credit first call now, because this is first call, credit first call. Are you getting it? So the next is give them shares. So you debit this, then you credit ordinary share capital account, as you can see. All right, so as soon as you're done with all of this, then you can go ahead to balance your account. Now to balance your account, let's start from bank accounts. So to start with bank account, this is 26. By the time you sum up all of this, it's 26,000. So 26,000, you balance the account. Then we move to the next. Okay, this 28. Okay, this 28. So you balance the account. You can see that this is balanced. The 5 to first call 5 to 5 to this is balanced too. Then on our ordinary share capital accounts, summation is 12. Is this 12,000? No, this is 26,000. Please, this balance carried down is 26,000. Please, you have to take note of that. It's 26, not 12. 26. It's 26,000. Please take note of that. It's not 12,000. Now, what this is saying is, if you look at all of these things vividly, if you look at them closely, you notice that bank account has a balance carried down. So this bank account is having a balance, a debit balance, which will be going into your balance sheets, which is your statement of financial position. And this application allotment accounts balance itself. So this one is gone. This is gone. This is gone. This first call account is gone because it balanced itself. So what you have is just this. You have this account and this account. So, and you can see that differences is also what I have here. So this makes our balance sheet balance because this bank account is shown under the asset, right? It's shown under our asset, right? So it's an asset while this is capital. So this is capital. And don't forget the accounting equation, which is being represented on the accounting equation that is being represented on my statement of financial position or balance sheet says that capital should be equals to asset. This is capital. This is capital is equals to asset, or assets is equals to capital plus liability. Where we don't have liability here, so that makes it defined, which is assets equals to capital. So this makes work much easier. So that's the end of this assignment, this question 1. So we can move to the next question. Which is example 2. Now if you check this example very well, very closely, you will know that let's read together. FAC Limited issue out 20,000 ordinary shares of 1 naira, each payable as follows. Shares of 1 naira payable as follows. Now on application is 10 kobo, on allotment is 20 kobo, on first call is 40 kobo, and on second call is 30 kobo. Now if you sum up all of this, 10 plus 20 is 30, plus 40, 70 plus 30, 1 naira. So that's 100 kobo. Of course, 100 kobo is 1 naira. Now, if you notice that this shares is still being issued at par. It's issued at par. So now let's move to the next. They said application was received for 31,000 shares. Please, you have to take note of this. Now, FAC Limited issue out 20,000 naira shares. Don't forget, it is 20,000 naira shares that FAC Limited issue for subscription. That is the number of shares they could sell. However, they said application was received for 31,000 shares, and a refund of money is made in respect of 1,000 shares, and for the remaining 30,000 shares applied for, an allotment is made on pro rata basis of 2 shares for every 3. So the excess application money are set off against allotment money. So the remaining request installments were paid in full. So we have to show the ledger entries. Now, to start with, first of all, they said the remaining request installment were paid in full, and we have to show the ledger entries. In this question, we've not been asked to show the journal entries. That is the more reason why I advise my students that the first thing you have to pay attention to in an accounting question is to check the requirement, what you've been asked to do. Understand? So in this case, we've been asked to prepare the ledger entries. So let's go straight to our ledger entries. But before we go to our ledger entries, let's get the preliminary workings to know the amount of money you'll be posting for each case. Now, first of all, they said application was received for 31,000 shares. Now, for 31,000 shares, how much is the application money? Application is this is let me move to this is on application. It is 10 kobo on application, so they are paying 10 kobo. Now for application, now let's show our preliminary workings. For application, 31,000 people applied times 10 kobo. So for all of those 31,000 people that applied paying 10 kobo, they will be paying the amount of 3,100. So you have to be careful while punching in calculators, because this is 10 kobo is 0.10. Please take note of that. Don't press 31,000 times 10. Do you understand? Okay, so let's move. It's going to be 3,100, And if you notice this, okay, so the question says application will receive what 31,000 shares now, and the refund of money is made in respect of 1,000 shares. So we have to consider the refund. So out of this 31,000, which is out of this 3-1, they refunded 1,000 shares. Now a refund of 1,000 shares was made. Now for this refund, it's going to be application money on, okay, for this refund they will be refunding 1,000 shares out of this 31,000. However, we were told that for the remaining 30,000 shares applied for, an allotment is made on pro rata basis of 2 shares for every 3. Now, for us to be able to apportion 2 shares for every 3, what we are saying is, okay, now first of all, 31,000 people applied. Now I have returned 1,000, so I have 30,000 left. Now for those 30,000, what I'm going to do is I will be sharing 2 shares for every 3. So for every 3 people that applied, I will give them 2 shares. So it's going to be 2 over 3 times 30,000. Now 2 over 3 times 30,000 will give me 20,000. 2 over 3 times 30,000 will give me 20,000 times 10 kobo, because this is the allotment on, this is the application money on allotment. It's going to be 20,000 times 10 kobo, which will give me 2,000. That is the application money on allotment that I'll be saying is 2,000 naira. That is 2 shares for every 3. Now on the refund, don't forget refund, I'm making the refund of 1,000. So 1,000 times 10 will give me 100 naira. So refund is 1,000 shares times 10 kobo, which will give me 100 naira. So for this case, then I am done with the application. Okay, so also I want to check the, okay, so okay, and now they said the excess application money received are set up against allotment money. The excess of application money received are set up against allotment monies. Now how much is the allotment money I'm receiving? Now for the allotment, it's going to be 20 kobo on allotment. So 20 kobo times, no, so allotment now is 20 kobo times 20,000 shares, because I can only give what I have. That is, I can't give what I do not have. You know, there's a rule, there's a Latin word in business law that says the most that goes and none abate. That is, what you don't have, I mean, you can't give what you don't have. So in that case, I can only allot what I have, which is 20,000 shares. Now, so for the allotment money, it's going to be 20,000 times 20 kobo, which is 20,000 times 0.20. Now 20,000 times 0.20 will give me 24,000 naira. So that is my allotment money. However, for this allotment money, I've been told that the excess application money are set off against allotment money. So to be able to set this off, now let's see what will happen. First of all, application, I received 31,000 applications, right? So to calculate the excess money set off against allotment money, I received 31,000 shares, right? Good. And I refunded 1,000. So 1,000 minus this is going to give me 30,000. Okay, so I have 30,000 left. However, out of this 30,000, I was able to allot, you know, 2 for every 3. Now 2 for every 3 times 30,000 will give me 20,000 on pro rata basis. So I was able to you know, assign, you know, shares of 20,000. I was able to allot 20,000 shares. Okay, so when you take out this 20,000 from this 30,000, I would have 10,000 excess shares. So 10,000 excess shares. Now for this 10,000 excess shares, now what they are saying is I should set it off against allotment. So they're setting this off against allotment, and this 10,000, the worth of this 10,000 will be 1,000, because I paid this excess. The amount I paid for each of them is 10 kobo. Do you understand? So multiply this 10,000 by 10 kobo is going to give me 1,000 naira. So, and don't forget that they said this excess money on application should be set off against allotment. And on allotment earlier, we said we are expecting 4,000 naira from them. So in that case, if we take out 1,000 from 4,000, I will have 3,000 left. So the total allotment money that I will be receiving now would now be 3,000 instead of 4,000, because I have set up this 1,000 against the allotment money. So if you understand this, let me move on. So let me move on. Now I can move to the next, which is, and they said that the remaining request installments were paid in full, and the remaining requests involved the first call and the second call. So for first call I have 40 kobo, and second call I have 30 kobo. So for first call, 40 kobo, that's 40 kobo times 20,000 shares. 40 kobo times 20,000 shares is going to give me 8,000. For second call, 20,000 times 30 kobo is going to give me 6,000. Then, now, as soon as I'm done with all of this calculation, then I can go ahead to prepare my ledgers. Now, to prepare my ledgers, don't forget, first of all, this is ledgers on separate account I prepare for application and allotment. Now, the reason why I'm separating this application and allotment is because of the instruction I gave you earlier in this video. You know that in terms whereby you are asked to set off, application on allotment or application against allotment, you might not find it funny, you might not find it easy if you are using combined or joint, application and allotment account. That's the reason why I want to separate this, so that you'll be able to see how everything plays out. So to start with, I have to create my ledgers. I'm expecting to see bank account ledger, ordinary share capital ledger, application and allotment ledger, first call, then second call. All right, so now let me open all of those. Bank account, then application allotment. Okay, application, then allotment. I expect 6 ledgers. So this application, this allotment, I'm separating them because of the setup I will be doing later. Okay, so then I have my ordinary share capital account. So the other 2 set of accounts would be seen in my next slide, but I'll try to see how I can navigate through. All right, so now for this case, the first thing, okay, don't forget, I'm dealing with Naira, so I have to ensure my currencies are there. So put all your currencies. Now the next thing is you start your posting, and first instance your for application. For application, you receive application for 31,000. Don't forget, not 20,000. You receive application for 31,000 shares. Now when you receive application, and while doing our calculation, so for note 1, total money received on application is 3,100. So you have to debit bank because you are receiving money. You debit bank, right? Good. And you credit application account. You credit application account. That's note 1. Don't forget, you debit bank, you credit this. Now the next thing is you refunded. Now the point of refunding, you have to credit bank because the money will be going out from your bank. So you credit the giver. So you credit bank, then you debit application account. Credit 100 naira, then debit this, 100 naira. Now if you understand this so well, then we can move to the next thing. Now the point of allotting. At the point of allotting, they said application money on allotment. So now on allotment, you're allotting 2,000 naira. So on allotment, when I say allotment now, we are not really dealing with the allotment, so to say. We are still dealing with, you have to allot shares to the applicant. That is at the first stage of application. So that is this money they've paid, this 3,1 that they've paid, you have to allot shares to them. So at the point of allotting, you have to come here to debit the ordinary share capital account, debit ordinary share capital account, and credit debit application account and credit ordinary share capital account, because you'll be giving shares to the applicants, to those that have applied. So you debit this, then you credit this. So crediting this, you have to application account 2,000 naira, then you debit this with share capital 2,000 naira. Now you have to take note of this. They said that the account was the excess of application, because you can't allot beyond what you have. That is, you can't give what you don't have. Do you understand? So, and the excess of this, which is 1,000 naira, the excess of this, which is 1,000 naira, was set off against allotment money. So we have to, the excess of this, we have to set it off against allotment money. So you debit this, which is the excess of this. You debit application account, then you credit allotment. That was, I think that I gave the rule then. So you credit this. Do you understand? You credit allotment account because that's the excess of this. Then at this point, we are done with application. We can now move to allotment. Now, okay, moving to allotment, we said that on allotment money received was 4,000 naira. Allotment money is 4,000 naira. Allotment money received is 4,000 naira. But because of the setup that you've done, the money you'll be receiving would be 3,000 instead of 4,000, because you have received part of it on application. That's what we are saying. You have received part of it on application. So it's going to be, the first thing you do is you debit your bank account with 3,000 naira. Then you credit your allotment this time around. Credit allot, because this is allotment. Credit allotment 3,000 naira. So by the time you want to give out shares, now the value of the share you'll be giving out, because you have allotted this 3,000 plus 1,000 will give you 4,000. Then you'll be allotting shares worth 4,000 naira on this allotment. So this you debit with 4,000. Then you credit this with 4,000. The ordinary share capital with 4,000. So we are done with allotment. So we can now move to the next, which is first call and second call. Now on first call, the first thing you have to do is you receive money. Now receiving money, you will come to the bank, you debit it, first call 8,000 naira, then you credit first call account. So you have to open first call ledger. Now opening first call ledger, you have to create another ledger probably in your notes. So this is the way it looks like for the first call. Credit it, then credits your bank account. This is what I'm saying. You credit your bank account of 8,000 naira. You understand? So that is that. And for the next is you have to open your, you have to get your, move to your, before we go to our second call, don't forget, now you have received money. The next thing is you receive, you receive shares. Now for the receipt of shares, let's suspend that. I would okay. Let's take it once and for all. Now for the receipt of share, what you would do is you go to first call account, then you debit share capital, then you come to share ordinary share capital and credit it. Do you understand? We'll credit it here. We'll put first call here 8,000 naira. Then you go to its ledger. You come to its ledger here. You debit it here 8,000 naira. You understand? So in that case, what it means is you credit first call account, then you debit it in the ledger. So in that case, let's move to the second call. Now for second call, you receive money first as well. You go the same route that you've done for first call. You receive money here, you debit it here, right? So you debit second call account here. Then you also open second call ledger. So when you open second call ledger, which is this, you credit it as well with 6,000 naira. And when you are receiving shares, you come to second call account, you debit share capital of 6,000 naira. Then you come to ordinary share capital account and you credit 6,000 naira here. You credit 6,000 naira here. So at this juncture, we are done with our posting. So what we need to do is just balance the whole thing up. Let's start from the top, which is the bank account. Now if you add up all of this, 31 plus 3,000, 61 plus 8,000, that's 14,1 plus 6,000, that's 21. And 21 and 100, so the balance credit is going to be 20,000 naira. So you take it off, you balance it off this 20,100. So if you check this is 31, this 31, so you balance it off, you need it off, this 44, you balance it off. Now this is balance credit, this 20,000 here. Now if you check first call and second call account as well, you notice that the first call and second call account knocks itself off. So it balances itself. You can see this 8,000, this 8,000, this 6,000, this 8,000. So that is what we are saying. Alright, so if you check all of this account, you see that the two accounts we have left is bank account. We have balance carried down here on this part, which is a debit balance, this nil of this also nil of this. So we still have another account, which is the ordinary share capital account 2. You understand? These are the two accounts. So this is asset and this is liability. So those are the two accounts that we have. You understand? So those are the two accounts that we have. So as you can see, that's the end of on our first call account. Just the way I've explained, it's gonna nil off itself. This will nil off itself. So it makes life easy. It makes life easy because the two accounts I have left is just my bank account and my ordinary share capital account. So if you understand this so well, I do not expect that you should have any challenge with dealing with the premium and the discount. But however, let me try to see if I can do one or two examples as relating to the premium and the discount. All right. So to start with shares issued at the premium, let's consider this question together. Kenyan Limited offer for separation ordinary shares of 120,000 of 1 naira each at 1 naira 25 kobo, payable as follows. And on application we have 15 kobo, payable on allotment we have 60 kobo. First call 25 kobo, then second call 25 kobo. Please, you have to take note of this allotment. This allotment of 50 kobo includes premium of 25 kobo. So that is to say we have some element of premium embedded within this allotment. So that's we have 35 for allotment, and then the balance of 25 kobo is for premium. So all the shares were subscribed for and allotted, and all the cash were received. So you have to make the necessary entries in the company's books and show the caption and premium account as they would appear in the balance sheet. So first of all, if you sum up all of this, if you sum up 15 kobo plus 60 kobo, that's 75 kobo with 25, which is 50 kobo. So 75 kobo plus 50 kobo will give you 1 naira 25 kobo. However, if you notice that the nominal value of the share is 1 naira, as it is disclosed here, so and we are selling shares of 1 naira at 1 naira 25 kobo, so that implies that the 25 kobo difference there signifies or stands for our premium. Don't forget, I explained in my previous video, I guess that should be the second video this time around, that premium shares issued at premium is a situation whereby shares are being issued at the price above the nominal value. So quickly, let's go to our workings. Then we post in the company's books as we have been told to do. Okay, so share issue at premium. So first of all, to take the solution, let's take the workings. Okay, this time around let's navigate through the screen as usual. Okay, so okay, on application we have 0.15, so 0.15 times 12,000 will give you 0.1 times 12,000 will give you 1,800. Then on the allotments we have 0.60. 0.60 times 12,000 will give you 7,200. On first call we have 0.25, and on second call we have 0.25. However, you have to take note that on allotments you have some element of premium embedded within this allotments, which is 0.25. So let's get the premium is 0.5 times 12,000, which is 3,000. So what this implies is that from this premium, from this allotment, we have allotment which is 7,200. The premium value is 3,000. So the difference of the 3,000 with 7,200 is going to be 4,200. So the allotment value itself, which is the ordinary share capital value on this share, is 4,200. So 4,200, and the premium is 3,000. Okay, so now as soon as you understood all of this part, we can move to the journal preparation properly. Okay, to start with our journal, you create your table. So your journal debit and credit, and the first instance is when we receive money, don't forget our rules. You receive money in the bank, then you give out shares. You receive money in the bank, then you give out shares. So at the point when you are receiving money in the bank, okay, so when you are receiving money in the bank, don't forget for this application it is 1,800 that you'll be receiving in the bank. So you go ahead to debit your bank, debit bank account 1,800, and credit application and allotment account 18. So being money received in the bank or being money collected on application. And at the points when you're giving out shares to for those money you have received, you credit ordinary share capital account, then you debit application and allotment account, and credit ordinary share capital account with that same amount. You're done with that. So being allotment of 12,000 shares. So we move to the next, which is on allotment. So on allotment this time around, first of all, you receive money in the bank, so debit bank account. So you debit your bank account, and you credit your allotment account. And don't forget, we have a joint application and allotment account. So you credit application and allotment account. So being receipt of money on allotment. Now at the point when you are allotting shares to the on allotment, now don't forget that on allotment it has been said that the premium allotment money, we check this analysis, we said on this allotment money we have 60 kobo, and on this 60 kobo it is split into two. We have some element of premium within the allotment, so and the premium is 3,000 while the ordinary share amount is 4,200. So this is what we would do. Now at the point of allotting shares on to them, what you would do is you debit your allotment with 7,200, which is the old money. Debit allotment with 7,200. Now to credit this time around, what you would do is you credit your premium of 3,000, and you credit your ordinary share capital account with 4,000. Why? Because for this allotment, this 60 kobo of allotment, we have premium element of 25 kobo there. So this 25 has to go to premium account separately, while the remaining 35 has to go to ordinary share capital account. So you credit ordinary share capital account with 4,000, so which is 35 times 12,000. Then the rest, which is premium, would be going to premium account separately. So by the time you sum this up, 4,2 with 3,000, you will get 7,200, which is the corresponding debit entry here. So that makes this account to be balanced. So this is being money, amount payable on allotment. So as soon as you're done with the allotment, thereafter we can move to first call and second call. So on first call, don't forget that usually the practice is you receive money first. So you receive money first. By the time you are receiving the money, you debit bank, you credit first call, then being money paid or received on first call, and on giving them the shares, you debit first call, then credit ordinary share capital account, being allotment of shares on first call. Then on second call, you receive money first, debit bank, credit for second call, being money received on second call. Then on allotment of shares, you debit second call, then credit ordinary share capital account, being allotment of shares on second call. So if you understand this journal so well, then you can go ahead to use it to prepare your ledgers. And on your ledgers, don't forget you are opening your T, so bank account, application allotment account, ordinary share capital account. Then we should still have our premium first call and second call ledgers exactly, but because of the space on the screen, I might not be able to show that here. You get that on the next slide. Now for these ones, on for the first entry, which is the application, to start with, you debit your bank account, then you credit your application and allotment account with 18. Don't forget it is 18. 18 yeah application. Then for that same application, you give them the shares. Now giving them shares, you debit application and allotment account, then you credit ordinary share capital account. Alright, so we are done with application. For allotments, you receive money, you debit bank with 72, you credit allotment with 72. Then on giving them the shares, what you do is, now you now debit application and allotment with, please don't forget, you debit it with 35 kobo times 12,000 this time around, which is 4.2 exactly. You debit with 4.2, then you credit ordinary share capital account with that same 4.2. So and thereafter the second, which is the balancing figure for that 4.2, to make you get 72, will be going to share premium. So you post your share premium on the debit side. Then the corresponding credit entry will be the 4.2. This 4.2 will be going to ordinary share capital account, which is this, and the 3,000 will be going to your share premium account, which is not on this table. Please, you can open a share premium account, then post on the credit side. You have share premium account, share premium of 3,000 coming from allotment account. So please, you can do that on another sheet. So as soon as you're done with that, then we can move to the next, which is first call. First call, you receive money first, you debit your bank account, then you credit the corresponding entry will go to first call account. So as well, you open your first call account too, in a sheet like that same sheet that you are holding. Open another account, open another T ledger. So and tag it first call account. So your corresponding credit of 3,000 should go there. Then after you can move on. So for this first call that you have paid into the bank, of course we will give them shares. So on giving them their shares, you debit first call account, debit it on that sheet, then the credits will come to ordinary share capital account, which is this, which is on our first call 3,000 naira. So as soon as you're done with first call, then we can move to second call. Second call, you debit bank, bank for 3,000 naira, then you credit second call account. So definitely what it implies is you go and open your second call account too. So that makes it 3 different ledgers. Those are the share premium, first call, and the second call. So for your second call, you put the corresponding credit entry there, which is 3,000. Then we move to the next. Okay, so at this juncture, you have to give second call, you have to give them shares. Now on giving them their shares, you debit second call account. On that same table you have on the same table you drew, you debit second call, then the corresponding credit will come into ordinary share capital account, which is this. Okay, so that makes it that's the end of our posting. So now what you need to do is, let's balance this whole account to be able to see. Let's start from bank account. To start with bank account, the balance carried down is 15,000. Mix the debit and credit balance. Then you move to the next, which application and account, that's 9,000. Then you move to the next ordinary share capital account, 12,000. Okay, so now if you look at all of these things, if you notice that bank accounts has a balance carried down here. Bank account has a balance, and you know, if you check our usual practice, you can see that this application and account cancel itself, that is, it's self-balancing. So and so also we have the ordinary share capital account here. So this is asset and this is capital. So we can move on. So that what this tells us is that we would have just bank account and ordinary share capital account, and we also have, you know, let's move to the next, because at the point of balancing for first call, so if you follow the instruction that I gave, if you set your first call account, if you follow the instruction clearly, you notice that your first call account and your second call account will be looking this way. Okay, so your first call account should be looking this way. If it's not looking this way, that means you did not follow the instruction I passed. And then your second call account too should be looking this way. Now for your share premium, don't forget that the corresponding credit of 3,000 is coming here, while you would have a balance carried down of 3,000 as well. So in short, okay, what would have left is we'll have the bank account, we'll have the ordinary share capital account, and we'll also have the share premium. So those are the 3 accounts that we have balances. So this cancel itself, this cancel itself. So we have just 3. So for those 3, this is how you post them. For the 3, so you, of course, you know, bank is an asset, so it comes to your credit, which is comes to your right hand side, while for capital it comes to your left hand side, and your premium comes to your left hand side. So it's a reserve. So by the time you sum up this, so 15,000 on the on your liabilities and capitals end, and 15,000 on your asset. That makes your balance sheet to be balanced. So I believe you could see the interpretation of this whole thing. So that tells us that, you know, you've been able to, you know, post the right thing, and your account is fine. So that is the end of, all right. To start with shares issued at a discount. So this is example 3. I would be taking using this example to explain when shares are being issued at a discount. And don't forget, I explained to us in my second video that when shares are issued at a discount, it implies that the shares are being issued at a price below the nominal value. So take for instance, okay, let's take this example. Kegan Limited offered for subscription ordinary shares of 20,000 at 1 naira each at a discount of 5 naira at a discount of 5 kobo payable on allotment. Okay, so what it implies is the nominal value of this share is 1 naira. However, the company is ready to offer the shares at 95 kobo. So application received is for exactly 20,000 shares payable as follows. That is, on application they receive 20 kobo, on allotment they receive 20 kobo, and on the first call they receive 60 kobo. So by the time you sum up all of this, it would give you 100 kobo, which is 1 naira. However, you need to take note that the discount element is found on the allotment. So instead of getting 20 kobo on allotment, you'll be getting 15 kobo. So that is, you will take out the discount from the amount on allotment. So you are required to make the necessary entries in the books. Now to start with, let's consider the usually we will show our workings, which are the preliminary workings. So to show our workings, so on application is to get a calculation 12,000 by 0.2, which is 20 kobo, you would get 4,000 naira. And on allotments, please don't forget that on allotments the amount of the discount is on the allotment. So the discount is 5 kobo, which is 0.05. Please, you have to take note of that. 5 kobo is 0.05, is not 0.50. 50 is 50 kobo. So 5 kobo is 0.05 times 20,000, which would give you 1,000 naira. And also the amount paid on allotment will now be 15 kobo, which is 20 kobo minus 5 kobo, which is 15 kobo, times 20,000, which will give you that 3,000 naira. So on first call, 60 kobo times 20,000 is going to be 12,000 naira. So with this we can move to the next. Now if we are moving to the next, okay, so if we're moving to the next, which is the opening of the journals, the necessary books. So open our journals, you draw your formats, which you have your details, debit and credit. Now to start with, on the application, don't forget that the procedure is you receive money in the bank. Now at the point when you receive money in the bank, you debit your bank account, and then you credit the corresponding entry, which is application and allotment. If you're opening a joint account for application and allotment, so you debit a bank account with 4,000 naira, credit application and allotment 4,000 naira. So being money received on application. So when you at the point when you are giving them shares, you debit application and allotments, then you credit ordinary share capital accounts. So being shares allotted, 12,000 shares allotted, okay, on application. So now for allotment, now this time around, at the point when you are receiving cash, you debit your bank account. How much do you receive this time around? You received 15 kobo by 20 is 3,000 naira. So you receive 3,000 naira. So you debit bank with 3,000 naira, then you credit application allotment with 3,000 naira. So being money received on application on allotment. Sorry. All right. So now this point you have to be very careful, because this point is the part that seems to be a little bit tricky. Now the part where you'll be allotting shares to them, even though the shares you're allotting to them, actually they're supposed to pay 4,000 naira for these shares. I hope you know. If you check the analysis that we did here, they're supposed to pay 4,000 naira, but they are not paying 4,000 naira. Instead, they are paying 3,000, and the 1,000 naira is discount. So what we are saying in essence is the value of the stock, the value of these shares that you are allotting to them is 4,000 naira. That's the nominal value, is 4,000 naira on this allotment. However, you are paying, you're asking them to pay 3,000 naira, and then this 1,000 naira is going to be charged to your discount. It's going to be charged. It's going to be seen as a preliminary expense. So in that case, what will happen is at the point when you are giving them shares, you'll be giving them shares to the tune of 4,000 naira. So application allotment will be you'll be giving them shares to the tune of 4,000 naira. So in that case, you will debit your application allotment account. You will debit 3,000 naira, which is the amount that they've paid, and the remaining balance of 1,000 naira will be debited to your share discount account. then you credit the whole amount, because the value of the shares you are giving them is 4,000 naira. You credit it to ordinary share capital account. I believe you understand what I'm saying. So what I'm saying in essence is the exact amount of that stock, the exact amount of that, which is the nominal value of that stock, of that share, is what you'll be posting on your ordinary share capital account, and the value, the exact amount that they have paid on allotment would be the amount you'll be posting on application and allotment account. This 3,000, don't forget they paid 3,000 here, they paid 3,000 here, so it's the 3,000 that you'll be posting in application and allotment account. So the balance will be going to the debit side of your share discount account, because it is a balance. It's going to be going to your share discount account, and the corresponding debit entry will be coming to, corresponding credit entry will be coming to ordinary share capital account. So those are the entries you'll be passing for the allotment of shares. All right, so we can move to our first call now. So this time around, moving to our first call. First of all, you're receiving cash when you're receiving money in the bank. You debit your bank, you credit your first call, debit bank, credit first call with 12,000, which is 0.60 times 12, 0.60 times the amount of share, which is 20,000 shares. Then you move to the next, which is at the point of allotting shares to them, you debit first call account and you credit ordinary share capital account. You credit ordinary share capital account. So as soon as you're done with this, then we can move to the preparation or posting to our ledgers. So posting to our ledgers, so we have to strike out our ledgers. That's our C format. So for bank account, application and allotment, ordinary share, then share discount, and first call. Okay, so because of our sheet, which is of this slide, we'll be able to. I'll advise that you should strike out your share discount and first call on a separate sheet. That's just the way we used to do. Now for the bank account, ensure you have your currencies. For the bank account, the first thing you will do is you debit your bank, then you create application and allotment, 4,000, then 4,000. Now that's on application, and also on application at the point of giving them shares, you will debit application and allotment with 4,000, then you credit share capital account with the same amount, 4,000 naira. All right, so we are done with application. So to move to allotment, what you would do also is you debit your bank account with 3,000, because that's the exact amount you are receiving, and you create your allotment with 3,000. Don't forget that this is a joint application and allotment account. Then now for this application allotment, for this allotment, don't forget that the exact amount you are receiving is 3,000. So instead of 4,000, now the balance of 1,000 naira is a discount. So you have to credit 1,000 discounts here on the allotment account. Then your corresponding debit entry would go to your share discount. Your corresponding debit would go to your share discount. So on the share discount that you strike out on your notes, so please put debit share discount 1,000 from allotments there. So now on the point of at the point of allotting shares to this on this allotment, because the value of the share is 4,000, so you sum up this 3,000 with 1,000, and that will give you 4,000. So you debit application allotment here, another 4,000, then you put the corresponding credit entry to your share capital account of 4,000 naira. So we are done with that. So we move to first call. Now for first call, you first of all receive money, then you debit bank 12,000, then you credit ordinary share capital account of credit first call. Now the first call that you've struck out, you credit it with 12,000, then you debit first call account with 12,000, then credit ordinary share capital account with 12,000 here. So I believe you must have done that on your sheet as well. So at this juncture, we are done with all our postings. So what you just need to do is you balance your account. So let's start with balancing, starting from the bank account. When you sum up this 7 with 12, this is 19,000. So this is your balance carried down is 19,000. When you sum this up, this is 88. So this balance up. So when you sum this up, this is 20,000. Your balance carried down here will be 20,000. Then that makes our account be balanced here. So now in that case, what it means is this application allotment account news up itself, that it's set up itself. So the accounts will be left with a bank account and ordinary share capital account. So that makes life easy for us. And also, if you check the account on your sheets, if you check the first call, you will notice that the first call account will news of itself. So also we have the only account that we have here will be the share discount. Your share discount is going to be, we have our a debit entry here, which is 1,000. Then you have your balance carried down. So in that case, what happens is that on your balance sheet, your 19,000 on your bank account will be coming to the credit side of your balance sheet, and so also your share capital of 20,000 will be coming to your to the debit of your balance sheet. So this 1,000 of share discount is treated as a preliminary expense, so which will be posted under your assets. So it's going to be 1,000 here. So that makes your balance sheet to be balanced. You understand? So that is, the end of shares at a discount. So that means life is easy. Now at this juncture, I expect you to be able to understand issue of shares at par, at discount, and at premium. Be it shares when full payment is made, and shares when that is payable by installment. So the few things that that you might need to know as regarding relating to issue of shares, maybe calls and arrears. Let's talk about calls and arrears before we call it a day. So I will explain calls and arrears, then I would explain forfeiture of shares, that is forfeiture of shares or reissue of shares. So I would explain that. So but if you need further explanation, you could reach out to me on the comment section or get across to us. So I would see the need for me to do more further explanation on the forfeiture of shares. So when we talk about calls and arrears, when we talk about calls and arrears, basically, I believe this is not the first time you'll be hearing arrears. So whenever you hear the word arrears is when someone has enjoyed something and the person are yet to pay for what they've enjoyed. You understand? Take for instance, when you have expense in arrears or accruals. You understand? We're talking about those set of expense that you have enjoyed but you have not paid for them. Take for instance, we have NEPA bills. For your NEPA bills, for most of us that are not using postpaid prepaid meter, for most of us that are not using prepaid meter, you get to enjoy or you get to use your electricity, and thereafter you get a bill from the electricity distribution company, and you go ahead to make your payments. You understand? So in this case, to calls in arrears is a situation whereby when shareholders fail to pay the sum due on call, so they have not paid. That is, they have not paid the sum due on their call. So the total arrears of this sum is called the calls in arrears. That is, when the amount paid up on a call is less than the amount due, then we have calls in arrears. So when the amount paid up on a call is less than the amount due, then we have calls in arrears. So the calls in arrears account will be open and debited with the arrears, and the call account credited. So don't forget, once again, the accounting entries will be the calls arrears account will be open and will be debited, and the calls account will be credited. So what we are saying in essence is the amount that you have paid is not enough to clear your debts. You understand? That is, you still have some backlogs, you still have some outstandings. You understand? So that's what we call calls in arrears. So and that is what I've shown here. So calls in arrears will be deducted from capital accounts in the balance sheet. All right. So so for calls in arrears, let's consider an example. Okay. So using example 3. So that's the last example, example 3. That's example 3. Please take note of that. So under shares issued at the discount. So that was the only example that was used under shares issued at the discount. So if the subscriber of 1,000 shares fails to pay his final call, So show the ledger entries and how it will appear in the balance sheet. Now, to show the journal entries and how it will appear on the balance sheet. So this is the final call, which is the first call also. It's the first and final call. So let's show our workings. Don't forget that for the first call, the amount is 60 kobo, which is 0.60. Let's check through our screens. For the first call, which is final call, this is the call, is 0.60 on 20,000 shares. So this time around, it's going to be 0.60 times. So now 1 people has failed to pay. 1,000 shares have 1,000 share subscribers have failed to pay. So to get the amount of the calls in arrears is going to be 0.60 times 1,000, which will give you 600 naira. So now don't forget the bank account will be affected. So for the bank account, before, what we have in the bank account is, let's quickly check what we have on the bank account. We have 4,000, we have 3,000, then we have 12,000. So for this 12,000, they said it is not all of them that has paid. Like we have we have less than 1,000. So this 12,000, don't forget, it was due to 0.60 times 20,000. That was how we got this 12,000. So it's going to be changing from 12,000 to 0.60 times 19,000 this time around. So it will give us 11,800 or so. So we'll get to calculate that. So the amounts we'll be receiving in the bank account will now be 4,000 plus 3,000. So this 4,000 here plus 3,000 here, now plus 11,400 instead of 12,000. So it's going to be 4,000 plus 3,000 plus 11,400. It's going to be 18,400 instead of the amount that we had there, which was 19,000 before. So we'll be having 11,400 here. So now, how do we do the posting on this final account? On this final account, don't forget, before what we had was, when on this final call account, the procedure is, first of all, they will pay in the bank. So we will debit bank, then you will credit first call account. So we'll credit first call account. So crediting first call account here, bank, before it was 12,000. Don't forget, now it is now 11,400 because it is not the old 20,000 people that paid. So instead, 19 people pay. So 19 times 60 kobo will give us 11,400. So arrears, the calls in arrears, so people that are here to pay, they are 1,000. So 1,000 times 60 kobo will give you 600 naira. So that's what we are posting here. So to balance this account, 11,600 plus 600, 11,400 plus 600 would give us 12,000 here. So this 12,000 will be posted into our share capital account. So that makes the account balanced. All right, so we can move to the next part. So moving to the next part, this corresponding entry of calls in arrears, you have to open a calls in arrears account. So open calls in arrears account, you have to debit calls in arrears. Debit calls in arrears with 600 naira from first call. Then you credit balance carried down to make it to balance the account. So you have a balance carried down of 600. So, and don't forget that the effect is you have to take this out from your share capital in your balance sheet. So we go ahead to open our balance sheet, our share capital of 20,000, you less calls in arrears of 600. And don't forget, on our balance sheet, initially our bank was 19,000, but because of the fact that we didn't receive, for 20,000 people, we received for 19,000 instead. So it's going to be 18,400 this time around. So your preliminary expense of share discount is still of 1,000. So by the time you sum up, you less 600 from 20,000, you get 19,400. By the time you sum up this, you get 19,400. That makes our balance sheet to be balanced. So this is, the way and the treatment of calls. This is the way to treat our calls in arrears. So I think the other thing that you need to know about issue of shares is forfeiture of shares. So let's talk about forfeiture of shares. Now, when we talk about forfeiture of shares, the article of company empower the directors to forfeit shares on which calls are made overdue. That is, when we talk about shares, when shares are due and they are not paid when they ought to be paid, it turns to you expect to open calls in arrears. And when the shares are being overdue, that is, you're expecting subscribers to pay, and they do not pay on time, and it's taking a while. So what you're supposed to do, the shareholder must be adequately informed. And if they are not turning up, what you do is you forfeit. That is, you try to collect back. Do you understand? You collect back, you forfeit their shares, and the accounting entries that you are passing is, upon forfeiture, what will happen is you debit. Don't forget that when we issue shares, you are giving out shares. You understand? So when you forfeit it, you are collecting back what you issued. You understand? So what you are doing is, upon forfeiture, the accounting entries you pass is you debit share capital account and you credit forfeiture share account with the nominal value payable on the shares forfeited at the date of forfeiture, and you debit forfeiture share account and also credit calls in arrears, because definitely the shares you might have forfeited, the shares that you might have called back are those shares that they are long overdue and they have not been paid for. So definitely they must have been sitting in calls in arrears before at some point in time. You understand? So there are those calls that they've been sitting so long in calls in arrears and you are not comfortable with the fact that they have not paid. So in that case, you are collecting it back. So the entries you are passing, first of all, debit share capital, credit forfeiture share capital account. Then you debit forfeiture share account. Then you credit calls in arrears. So what it happens is that it won't be sitting in calls in arrears again. It will be sitting in forfeited shares account. So in that case, Now, when we talk about reissue of forfeited shares, when you reissue forfeited shares, take for instance, people come around like okay, the subscribers eventually came over to meet you to probably apologize, and then see try to ask you to reissue the shares you forfeited back to them. So at the point of reissuing, these are the entries you'll be passing. So for shares that are forfeited, definitely they can be reissued and as fully paid at any price, as long as the sum received on reissue and the amount received from the original allottee before forfeitures makes up together at least the nominal value of the shares forfeited. So any excess should be transferred to share premium account. So what we are saying is, of course, when you want to reissue share, of course you could be if you want to reissue share, you can reissue share at an amount higher than the nominal value. So when the amount is higher than the nominal value, which is of course the excess should be transferred to the share premium account. So the accounting entries you'll be passing is, now at the point of reissuing, what you do is you debit reissue of forfeited shares with the nominal value of the account, then you credit share capital account. You understand? It's just like you are giving shares at on calls, like maybe first call or second call or third call, as the case may be. So in that case, you credit share capital account, then debit reissue of forfeited share. So, and also when you transfer the balance on the forfeited shares account, what you do is you debit forfeited share account, then you credit reissue of forfeited shares account. So that those are the entries you're passing on the reissue of forfeited share. So, and this time around, when you're receiving money in the bank, what you do is you debit your bank account, then you credit reissue account with cash receipt from the new shareholders, and also transfer the credit balance, if any, on the reissue of share capital account to a premium or on forfeited share account. That's if you have excess, that is if you have amount of money, that is the amount of money they are paying is beyond your the share value. So what you do is you transfer it to share premium account. So if you need further entries, further accounting entries or examples to test your knowledge on forfeited and reissue of forfeited shares, I will advise that you pick up any accounting textbook within your reach. And if you need us to give you more of examples on forfeited shares for proper understanding, you could drop comment on the comment section, or you could reach out to us. I wish you all the best. Thank you. You can also follow us on our channel. If you have any question, you can reach out to us. You can follow us on our channel, subscribe to our channel so that you could get more video. Follow us on Facebook, LinkedIn, Twitter, and Instagram. I wish you all the best. Thank you. Take care of yourself.